moving down, for you contrarian traders out there, you're trying to buy it as it's moving down, you're getting continually stopped out. So now if I can combine the two, I can see from my weekly bar, here's the support area that I should be looking for, here's the break that I was talking about Friday last week. So I have my first clue. Okay, it's broken through the prior week. Now I've got this area that I need to watch. So as price starts moving, what happens? You got these big bars here showing continued momentum right at the 9,300. Well, if there's continued momentum, that means at the very least I need to see confirmation. And we don't get it, do we? You see the market broke through 9,300 and now it's barely retesting, meaning it's coming up and now it's starting to retrace. And you can see the market just cuts right through again. So now it's down here about 9,200. Again, if we planned ahead, you've got this level here. What does that level match up with? Well, if we scroll back on the weekly, you can see this is a point that I've been talking about for a long, long time. Look at that. Right into this level from 2005. So what's the whole point? Well, the point of this is that this planning stuff really does work. And it really does give you a perspective, so you're not just reacting to what's going on in the market. So when the market is doing this, and it's pushing down, and then it retraces back up, well, you're going to want to see it make a much better retrace than this. I mean, 9,300 should be support, but look at that. It broke right through it. What you would want to see is that the market stops. Let me give you a better example. Here's what I would want to see. If I was going to gauge support as being strong, I would want to see the market doing this, meaning barely coming down into support, or something like this, where it closes below but then immediately comes right back in. That's what I would want to see. Okay? But we don't see that. We see the market doing this. It closes below for 2 bars and then takes several bars to get back in. Okay, that means that the momentum to the upside is dying off. There's big momentum here, which means few bars. There's less momentum here, which means there's many bars. So I have to go down to my next support area, which came in down here. We can just scroll back to the week here and see. This was 92.20 area. So as the market starts moving down, I could just simply put a line on my chart right about in here for the 92.20 area. Now you can see here initially when the market, it held the support. This would be exactly what I was looking for. The market comes back up, and truth be told, it would have been legitimate to take a stop there. That was a valid trade. The market was holding support, bouncing up. It just didn't work. So the market scoots down just a little bit more. And you can see as this thing pans out, this is an hourly chart, remember. We're looking at this as the hours go by. The market starts popping back up again, comes down here. Looks like it's forming a double bottom. At this point, this is where you can use the 3-bar reversals, meaning you're counting back. This is when you can use 3-bar reversals, or you can wait for the little dipper. Remember, the little dipper is when you get a pop up like this. After you have the market showing you that it's forming a reversal, you get the little dipper. What I'm waiting for now is the market to make a retracement back down into this support zone. So can you see that? Now that I've drawn the box on there, you can see that the market is forming a support zone here. Can't you? It's reversing down here. It's reversing up here, but it can't break out. It can't break out of the box. Now you get the reversal. Of course, it would help if I didn't press the wrong button. There we go. So here you get the reversal. Now again, we're monitoring what the market is doing. We're keeping track of what is going on in the marketplace. So we bring up the Fibonacci tool. How about this for a Fibonacci tool?